with regards to track record and things like that, that is obviously a very important part of underwriting. What is also always a little bit concerning is if you send the loan agreement out and it gets signed and sent back 15 minutes later. You think, well, this is a proper document that you should probably read through, talk through with your lawyer, and make sure that everything is in order.
Hello, my name is Alex Harrington-Griffin. I am your host of the Real Developer podcast, powered by the creators of Land Insight and LandFund, the awesome LandTech. In episode 9, we get into the funding landscape, talking about the process for SME developers with my co-host, Oliver Holden, senior broker of LandFund, and Callum Ferguson of Clearwell Capital. Together, we discuss everything from the change in lender focus post-COVID to the transparency process as part of your application. We also dig into the risk of proximity in choosing your professional team. Please remember to subscribe and like the episode if you enjoy it. And on that note, let's get on with the show. Hello and welcome to the Real Developer podcast. My name is Alex Harrington-Griffin. Welcome to episode 9 of the series 3. Today, we're getting stuck into a bit of the funding world to finish off this part of the series. And my guest today, or my co-host, is Oliver Holden, senior broker at LandFund. Good morning, Ollie.
Thanks for having me.
You're very welcome. You were an easy choice, to be honest. Yeah, I've done events with you in the past, and you're very good at sharing your insights. So I look forward to joining me today. And our guest, who's going to be talking from the lender perspective, is Callum Ferguson of Clearwell Capital. So you're head of business development. Well, we've done some pretty solid briefing, and I must admit I've cheated a little bit by reading some publications yesterday that you were involved in interviews for. So I've got a bit of insight into how you feel about the planning world. We're not going to dive too much into that today. But I think we should probably start by recognizing maybe some of the success and the story of Clearwell Capital. So my notes, if they're correct, 10 plus years in business, 9 in the team, going on to 110 plus deals. What do you guys feel is the biggest learnings you've taken from that? And how does that feature at the moment into your process and the type of deals you do?
Yeah, good morning. Firstly, thanks for having me. So I say over 110 different real estate funding deals. You can imagine we've seen quite a lot of different, issues and some great successes as well. So I think the important thing with development is every kind of misstep is an opportunity to learn and to grow. I think the overwhelming factor from sort of the amount of time we've been in the business is really transparency and open communication between your borrower and your lender. It's really getting into that mindset that you're both on the same team.
Yeah,
you really want to get the project finished, and then the borrower can get the lender can get redeemed, and the borrower can release their profits and go on to the next one. So really working together, throughout the lifespan of the project is a really important thing. And I think that butting heads at every juncture does make things kind of all the more difficult. And you want to be finishing the project thinking, God, that was hard, or that was straightforward, but we've done it. We'll learn for next time, and we'll work together again. You don't want to be sort of thinking, oh God, that was too much, too much hard work.
Mm-hmm.
We're not going to be sort of working together going forward. So from our learnings, it really is the when things go quiet between the lender and the borrower, that tends to be where something is simmering that may be slight worry. So we have certainly adapted in recent times to taking much more of a front foot approach, shall we say, to our communication with our borrowers.
And so going quiet doesn't necessarily mean they're getting on with it. Things are all good, even from an experienced firm. You still
it can do, yeah. but it can also mean that there is a sort of a nasty habit, maybe the wrong word, but some people think, well, if I just keep going, I'll sort it out later. Whereas actually sometimes raising sort of potential issues or potential delays with any development project at an earlier course gives everyone the chance to collaborate and solve the problem. Whereas I think there is a sort of natural, kind of disposition to sort of think, well, if there's something slightly off, don't say anything, and we'll be able to sort it out. But when you're working with particularly more kind of nuanced development debt funders, these guys quite often have a lot of experience in development, have seen a lot of things in the past. As you say, 10 years, 110 deals. There may well be something in that back catalogue of experience that can help the developer, finish the project in the most efficient manner.
10 years is quite a long time. You started out as mezz, I believe, Clearwell, but now transitioning more into sort of senior loans. That's the sort of position in the stack you want to be. What sort of prompted that as a change in appetite or direction? And is there anything that in there that benefits developers from that position as opposed to mezz?
There's a couple of things, I think. As you said, over that sort of 10-year period or 8-year period, maybe before we transitioned more into the stretch senior space, when you're mezz, you are kind of in the passenger seat to a certain extent. The senior lender is driving the transactions. They're processing the drawdowns. They've got more of that communication we just mentioned in the previous discussion, and that and having that control was a big reason to move across. We wanted to be more involved in that communication, have those more natural interludes, like monthly drawdowns is a great time to actually have those discussions, make sure that everyone is working towards the right purpose. When you are in mezzanine finance, you are kind of you're first in, last out, and sometimes you're kind of along for the ride to a certain extent. You can monitor, you can make sure you know as much as possible, but the actual levers you have to pull to affect things are quite limited. So that was one of the reasons to move across. Also, going back 18 months, 2 years, a lot of economic kind of factors played into that. The war in Ukraine affecting construction prices a lot, and then we were always very aware that interest rates were going to rise. We were not sat there thinking base rate is going to be 0.01 for forever. But that rise was steeper than maybe we anticipated in the first instance. Then you had Liz Truss and all that stuff that happened. So I think there was a decision to move into the stretch senior space. So we're not our position isn't being eroded by changes in base rate stuff, which none of us have any control over. So that was kind of the reason for it, and the reason we decided to move into sort of stretch senior lending in the sort of sub 5 million GDV space is because we felt that space was the one that is not as well catered for in the current funding landscape. It seems to me that most stretch senior lenders are sort of chasing the sort of 5 to 15 million pound ticket size deals. And we felt that the sort of SME space is not as well catered for by the dev financiers, and also somewhere where we could grow a sustainable business, grow with our clients, as it were, from the SME's perspective. And the other reason was a lot of funders coming out the back of the pandemic were starting to lend at 70% loan to value. Which doesn't leave much room for mezz. When mezzanine finance kind of started out, it tended to be that space between 65% LTV and 75% LTV. If someone's at 70 already, the mezz slice is smaller and then becomes less of a consideration for all the parties involved. So I think it's sort of really the biggest factor is having a bit more control of your own destiny.
Yeah.
You mentioned about the communication process in your first answer, and I want to talk a bit about the transparency piece, but you've gone from that journey of being the mezz provider going to now stretch senior role. How does the communication work going from, if you are in a mezz position, do you get the same level of communication as a senior debt? And I get to ask silly questions on here, Ollie, so you get to ask the really silly, important stuff. But from a newer developer's perspective, how does the communication work for your senior debt and your mezz partner?
It should be the same, and I don't think anyone goes into it thinking we're going to hold back information from the mezz lender. But the honest fact is there's not actually a huge amount of motivation for the developer to be as transparent with the mezz lender as there is the senior lender. Charges, and also the fact that the senior lender is signing off the monthly drawdowns. The mezz lender can't stop those from happening. So actually, there's not really a stick to say you must be better at this. You must tell us this. You must tell us that. It doesn't do them any favors to not communicate that well with the mezz lender, but there is that natural, guys are busy, particularly if the project's under stress. They're running around, they're doing all they can to try and keep the show on the road. A mezz lender asking questions that he's probably already answered with the senior lender, is kind of a bit like a gnat at a barbecue. It's annoying. They don't sort of want to do it. So I don't think it's not anyone trying to be really disingenuous. It's just a human nature kind of point that they're not going to be as fluent in their communication. However, the ones who have been doing it a while do understand that, because the mezz lender is always the one who's pushed first when more money is needed to be put in. So actually,
the relationship does need to be
exactly the
well.
best course of action for anyone is to make sure that you are telling those guys exactly what they need to know. They're further in it with you than the senior debt provider, is the honest truth. So it should be, you should treat them more, I suppose, as kind of as partners, because they're the ones who will be pushed first to put extra funds in.
Let me ask you, well, maybe it's a good question for Ollie, you can contribute into this as well if you can. I was going to ask about the transparency of the application, because obviously LandFund supports developers in meeting those lenders that can support their project, and obviously helping, the big sort of USP is putting a lot of that material together for the lenders to see very clearly and understand exactly the position of that site. So I wouldn't mind asking from your perspective, how you view the process and how you built your own process of review, but also maybe just to give a quick reflection on what does that look like once the debt is out there now as well. How do you like to see updates come through?
Well, every straight senior debt provider will have a monitoring surveyor in place who will sort of be out there to monitor the project on the bank's behalf. So that sort of triumphant, if you like, of borrower, monitoring surveyor, lender, flow of communication for those three parties is absolutely key. And I think really just being as sort of proactive as possible in terms of updating the lender on changes to PC dates or sort of any sort of overspend that's happening, or on the good side, we've got a party interested on some sort of pre-sale, all of that sort of material change to the plan stuff. It's much better for the lender to hear that direct from the borrower than to find out for a third party later down the line. So I think, although it's not always right in the front of people's psyche, it really does help with the sort of, if the lender's got to change docs or got to sort of, write extensions or that sort of thing. It's always better to be best informed as possible and not give someone else the chance to kind of put their spin on it or sort of report it secondhand. So I think it's really a case of, we try to get out to our sites, once a quarter at a minimum. If we can get there once a month, we try and do that. So try and keep that personal relationship going.
Give the opportunity to share things that aren't.
Exactly. Yeah. And also show off your work to a certain extent. I would say property developers are generally very proud of what they produce. So, getting out to site and seeing things purring along is kind of, is one of the best parts of the job. Obviously going out to site and seeing issues is sort of more difficult, but it's always better if you're prepped for that. If you're saying, look, I'm coming down because there is this, you can think about how there might be a way to solve it, rather than turning up and going, well, this is not what we expected at all, because we've been told it's all sunshine and rainbows. It's kind of, it's just getting that flow of communication sort of working from both parties.
Okay. Ollie, I think I'm going to let you take this next question, because our audience know we obviously work out who's going to ask what beforehand, what we're interested in. But I think this actually is a good question for you to ask, especially from a LandFund perspective, because you do a lot of the packaging up for site. I suppose the bits that you can't control, but you have to ask for best foot forward, is around that track record. So maybe if you put it in terms of your live deals at the moment, to understand how Clearwell approach it, or how they look at things like track record, etc.
Yeah, I mean, Callum sort of touched on it very briefly just then, in terms of developers like to show off what they've done already or what they're doing at the moment. what is it that you want to see from the developers when they're putting together an application, or even from a debt advisor? How much background do you want to be giving? Do you want to see photos? Was it just a case of a couple of bullet points? What do SME developers especially do very, very well in presenting their background, their business to you? And what would you like to see more of moving forward from debt advisors, but also from those developers themselves?
Yeah, I think with regards to track record and things like that, that is obviously a very important part of underwriting. And I think what we tend to get through is a list of projects that have been completed, some headline numbers. I started then, I finished then, and sort of, and this is what I sold it for. I think what people could do better to an extent is actually tell a bit more of the story between a couple of projects. Ones that went really successfully and other ones where there was an issue. If the project was a pain, but you sorted it out and sold it, then that is a really great sign for someone who's trying to sort of source finance, particularly at higher levels of gearing. So that sort of ability to problem solve is something the lender will really appreciate. So actually, you may not want to talk about it because it may be sort of post-traumatically stressful, but it's sort of
in development. They've got plenty of problems.
Exactly. So it is actually a really important thing. The other thing I think that sort of people can do is really look at the exit route. And I think that there's the one thing lenders always hate hearing is that if you challenge people on pricing, they say, "Oh, the valuation will tell us what it's worth." We as a lender, that we want to understand that the borrowers thought about the target market, that they've thought about why these sort of prices are going to be achieved. They've done some comparable research. We're not asking them to sort of write a RICS accredited survey, but we're sort of saying, really understand that and not sort of, it's that one plus 10% because it's new. That kind of, that may have been okay for a little while the market was flying, but as we all know, the residential market's been a bit tougher over the last sort of year or so. That sort of doesn't really cut it. So I think we always want to sort of, it's a good sign if people have thought about that.
Sure. And I think as well, from someone in my shoes that's obviously bringing deals to you and presenting that initial submission to yourself and going, well, this is their business getting up to inception, but moving through the project, and here's what we've done on the back or the exit side of that particular project. We've proven it here. We've seen other sites in this location that have done this. This developer's track record has continuously overachieved or set a precedent to market that they will secure, say 5-10% over comparables that we can show you. Is that something that's useful, or is that just too much information?
No, it's very useful. Yeah, anything like that, it really is a case of more is more on that sort of thing. The lender will be able to, filter out anything they don't think is particularly relevant. So it really is, all of that sort of stuff is really useful. I think, showing a track record of sort of, performing and sort of outperforming markets is really useful. Because it's showing that you're dealing with a party that's experienced and that has sort of has a track record of succeeding.
Do you think that is actually baked into the lending decision once you've received professional reports back? Because the valuer is going to go to site and say, well, XYZ is sold, we can prove it, that's the market value. Whereas, as we've just said, the developer saying, well, I've continuously outperformed the market. Are you as a lender going to say, well, that's great, but actually we can only rely on professional indemnity here as opposed to what you think you might do?
Yeah, it's very difficult to lend at above market value. What you may do is lend at a higher gearing rate against the valuation. So you may sort of say, well, our policy is, we're writing most of our loans at 68, but maybe we'll give this guy 71 because he's got that kind of that sort of track record of proving. So it's more the fact the valuation is always something that's confirmatory. We will do our own market research, and when we write our credit papers, there's a long section of it is comparable analysis and time on market in the area and all that sort of thing. So it shouldn't be anything that we don't know. Obviously, certain areas of the country where we've done more, we're more in tune. Other areas of the country, we are relying on the valuer a little bit more to give us the information that we need. But it really is a case of have we missed something in our comparable analysis that the valuer is picking up? But it really it's a confirmatory kind of process. So yeah, that's how we approach that sort of thing.
It's obviously tangible benefit in having that outperforming track record. It does go into the lending decisions, despite what the value says, as you've just highlighted. But are there any red flags that you encounter throughout this process with those developers in terms of, what would you look for when that lending submission comes through, whether from a debt advisor or from the developer? Are there any red flags that you're looking for directly?
There's certain things that crop up that you do think, right, this is interesting. I mean, for example, a loan agreement that we send out is maybe 10 to 14 pages long, depending on what you're dealing with. There's a lot of stuff in there that it's not particularly controversial, but there are some things that I always think that if I was in the borrower's shoes, I would ask about. For example, all development facilities now, as you will know, Ollie, are kind of written as on-demand facilities. And that is something that's probably been around for 5, 7 or 8 years. It's sort of transitioned that way. Now, I always find it a really great sign when the developer asks, well, does that mean you can call in the loan immediately? And sort of kind of the answer is yes. And someone said to me once, well, would you sign an on-demand mortgage? And I said, well, no. But so having that sort of conversation with lenders, it shows that they've read through the documents. They understand what they're signing up for. What is also always a little bit concerning is if you send the loan agreement out and it gets signed and sent back 15 minutes later. You think, well, this is a proper document that you should probably read through, talk through with your lawyer, and make sure that everything is in order. Now, it may be that some people have signed 15 to 20 of these agreements in the last sort of 5 or 6 years, and they know what they're looking at. So it's not always a sort of red flag, but I think particularly in the sort of sub 5 million GDV space, where the guys tend not to be as experienced, they're starting out on their journey. That is something that you want to know. People have looked at. Always think that the choice of lawyer from the borrower as well is very important. It's really important, particularly when you're starting out, to employ a lawyer who has development finance experience. Sometimes you see guys using the sort of person who bought their first house with them as a conveyancer, and they've known them for a long time, and they're giving the work on the development finance side. It is completely different to buying a house and taking out a mortgage. It's a different set of skills. It's a different set of sort of legal parameters. So having a solicitor who's au fait with all of those processes is really important, and they can help you drive the process more efficiently. And it's the old adage a little bit where you buy cheap, you buy twice. If you're employing someone on the borrower side who isn't quite up to it, then all that happens is that the lender's legal team, who are most likely going to be more expensive, end up doing more work, and you end up paying for that. So that's a real important thing to pick up as well.
Okay.
It's the danger of proximity, which we talk about a lot on this podcast as well. And it's maybe more of a personal belief thing for me, but as a former developer who made plenty of mistakes in the beginning, I think a lot of those where I got too comfortable, liked someone, thought, well, they did a good job on the first one, so they could probably pull off this one, and didn't consider enough about their track record and suitability for that project. It was, well, they're available and I know them, so it's a lot of work to go and find someone new. So it's that I personally feel that the proximity carries a lot of risk in development.
That's absolutely right. And for the lender as well, when you've done a successful project with a developer, you are always more likely to do another one because you're comfortable with each other. You know how each other work. You've taken away that big part of the underwriting unknown, which is how are these people going to perform when the going gets tough. But having said that, past success is no guarantee of future performance. So that you can get into a situation where if you overexpose with one client, your best client can go to be your worst client because you have a large exposure, and if one starts to go badly, that you can see it quite often that has an effect on other projects. Borrowers are so cash flow sensitive, if you like, that if they've got too many projects on at the same time, it can only be one that starts to falter, that sort of the dominoes can start falling. So it's really important to make sure that you're kind of underwriting everything on its own merits. That said, we all want to go into more long lasting relationships.
We've spoken a lot actually in the last couple of minutes there about the people that the borrowers bring into the table. And that does include yourself, as the lender into that transaction. We've spoken about track record and how open they are with yourselves from the outset. But how do you find that the people and the personality of those people, generally speaking, affect the lending offer or proposal that you're putting to the table? If you're looking at something and saying, well, the site or the scheme isn't necessarily something that we would support as just a vanilla transaction, but we really like the people that are bringing this site, the developer, whoever it may be. Does that get brought into the mix quite a lot, quite heavily? Or is it more numbers focused? This is the site. We just want to fund these types of deals.
I think it does come into the mix. Yeah, absolutely. I think, the old adage is you're better to do a 7 out of 10 development with a 10 out of 10 developer than a 10 out of 10 development with a 7 out of 10 developer. It, particularly in development, it's the people that actually pay you back. Of course, you have charge over the property, but you've got to build it. If you're writing mortgages or bridging's probably the halfway house in between, right? It's actually the bricks and mortar that you're securing yourself against. So the numbers become sort of sacrosanct in those scenarios. With the sort of development offering, I think it really is truly 50-50, if not slightly more weighted towards the borrower. Because they've got to perform, they've got to build it, they've got to manage the project correctly. If you have doubts about their capability to do that, then you shouldn't be pushing it forward because it's in a great location, or because it's you think the market for it is going to be really hot. Because if they don't build it, you've got a site in a great market, but it's half built. It doesn't, that's a pain in the backside to work out. So I think it is slightly weighted that way. That said, we are quite, as a company, we do our analysis. We are quite, the numbers have also got to sort of stack up,
of course,
but they have to stack up. Whereas the person is really important.
Callum, just before we get to our last real advice question, something you just made me think of there is, in my own capacity, I work with a lot of development teams that are single founder. How do you view single founder versus dual founder or dual director development companies when you're looking at those teams? Because obviously we talked a lot about the personality, and you're hoping that maybe that one person is strong enough to get you through whatever challenge you got. Sometimes, obviously, 2 people is better because you've got 2 minds there, you've got backup if you need it as well. But how do you view single founder versus sort of dual or multi-person founder?
I think we take it all in the round. I think Clearwell was a single founder operation. So Ed Marley-Shaw started it 10 years ago, and it's grown from there, and sort of more people have been brought in. So I think whether it's single or dual founder, I think the kind of the key element is that the person or persons you're lending to have understood the gaps in their armory, if you like. So if you're not a design led person, having I've got a top notch design person, or I've got a project manager who can keep the contractor on the case, or they've got a top notch advisor because finance maybe isn't their skill set. Maybe they were great on the tools and know how to build and can kind of deliver all of that. And if they're not necessarily the most financially literate, they can go to someone who can package all that up for them and really take on that role of making sure their loans function the way they were supposed to, and look at moving them if they need to, all of that sort of thing. So I think whether it's in multi-person or singular person, I think just understanding the operation and how that sort of org chart, if you like, works and who's got responsibility for what, and understanding what credentials those people have to have that responsibility is the sort of thing that we look to do as a lender when we're analysing these things.
Okay. Maybe they just need a really good debt advisor, Ollie. If they
sounds like that's what he's trying to say.
some of them do. Other guys know the numbers very well because they've made money somewhere else, in whether it be in the city or in other investments, and they want to do property development. And those guys sometimes are kind of quite open. So I'm not a building site guy. So you want to understand who their contractor is, how many times they work together. Do they have a project manager managing the QS? Just thinking like, if you think about it from a borrower's perspective, think, right, where are the holes in my sort of armory? How can I beef those up and sort of getting people with good CVs in that area where you're maybe a bit short is is a great skill, and it shows to the lender that you're thinking about it and you're sort of you know how to get this over the line.
I think actually, just very quickly, it goes the other way. I think from someone in my shoes as playing an advisor to the developer, understanding who from the lender side fits with their operation as well. I know we've done a few things together and it's always worked out perfectly, but I think it does go both ways. As much as the lender's looking for good developers, I think the developer needs good lenders and good people in those lenders to support them as well. And you've touched on it numerous times already in this conversation about understanding the track record and the personalities. But I'm a big advocate of it going both ways.
That's absolutely right. And we had it a little bit when we were, as we touched on earlier, transitioning across from mezz to stretch senior. The first 3 or 4 we did were with clients we'd lent to on a mezzanine basis before. Yeah. Now that was from our side, really, if someone's paid us back from a mezzanine loan, they should be well positioned to pay us back on a senior perspective. But also, looking at it from my perspective, if I was a borrower, so well, these guys have done mezz lending, they haven't done senior lending before. So why am I jumping into bed with a stretch senior lender who yes, has this back catalogue of successful mezz lending, but you're doing something that you haven't necessarily done. So building that kind of first tranche of successful deals with previous clients is really important, and we decided to do that for a reason. So that when people ask, well, what have you done? Well, here is what we've done. These are people that have worked with us before. They've come back for more. We see that as the best sort of endorsement. So we feel like we're a good funding partner for you because if I'm on the other side of the table, that's the question I would be asking.
And Callum, just to round off the episode, one thing we always ask our guests for is just a bit of real advice, and that's sort of a condensed sort of key consideration or a key takeaway. Obviously, looking at Clearwell Capital's perspective, but what is one suggestion you'd give to the SMEs that you want to work with, that you have worked with, to achieve the best lending proposal for 2024? And that's obviously, squeezing the timeline in terms of things that are naturally going to be coming to play, i.e. political elections. Yeah. What is your one bit of solid advice that you'd leave for the SMEs listening to this? It's
the theme that's been running through. It's probably is transparency. If you've had issues in the past, whether that be any adverse financial issues or anything that has come up, anything that you may find, lenders have Google and they tend to use it to try and look up what people have done. So if there is something out there that may put you in a sort of in a dimmer light, be upfront about it, let people know from your perspective what happened, how it was resolved. And in the most times that won't have an adverse effect. If someone has to go digging and find some sort of historical issues, that can be really difficult. And we have had one of our repeat clients, there is something out there that, he owned a sort of community asset, shall we call it, and there was a dispute with the seller. And there was some sort of local reporting on that issue. So you find it. They approached us. They were completely upfront about it. They sort of said, "This is what happened. Here is how it was resolved. Here is the sort of a sort of mediatory party, if you like, saying this is how everything was resolved." And we took it as a sort of as something that happened, and have gone on to be very successful with us. So I think it's that thing of just being transparent, be as open, be as warts and all, if you like, as you can when you're applying for lending, particularly in this time where, interest rates are a bit higher. As you say, we're going to have some political uncertainty next year. So people's risk antennas will be pinging a bit more than usual. So taking that out of anyone's hands is the best way.
Very good advice and a great soundbite to end up with as well. So thank you very much. Appreciate it, Ollie. Thank you, Callum.
Thank you.
Thank you.
Cheers. Hello, everyone. It's your host, Alex Harrington-Griffin again, just to say thank you for joining us for this episode. If you liked it, hit the like button, subscribe, and of course, share it with your peers. A big thank you to our partners, LandTech, for powering this episode. If you want to find out more about their products like Land Insight or LandFund, go to land.tech or follow LandTech on LinkedIn for SME developer updates, finance updates, and of course the data and research mentioned in this episode. We'll see you back for the next session when we get into some real development conversation. Thank you.